Hello traders, you're welcome to this video. In this video we are going to be discussing weekly pivot points. Okay, we're going to be looking at a step-by-step calculation of how you can get your weekly pivot points. Okay, in case of if you have been a fan of pivot points, or perhaps you have been wondering how these pivot points are being calculated, then you might want to stick around till the end of this video as we look into it. Okay, now the first thing we need to do is to gather the required data. So by gathering the required data, we need the high. Let's just go to the weekly time frame for this. We need the high, low, and close prices of the previous week to calculate weekly pivot points. Okay, so let us check. Let us get the information. So the high is 2722.52, 2722.52, right? Oh, I didn't put that properly. 2722.52. Then the low is 2638.05. 2638.05. 2638.05. Okay, and then our close is 2721.38. 2721.38. 2721.38. Okay, then the next thing for us to do after we have identified each of these prices for our high, low, and close, we are now going to calculate the pivot points. Okay, the formula for calculating the pivot points, the pivot points calculation is equal to the high plus low plus the close divided by divided by 3. We're simply finding the average of the high, low, and close. That one gives us the pivot points. That's what gives us the pivot points. Okay, now this is weekly pivot point that we are considering here. Now, as for our first resistance is the formula for our first resistance is 2 by pivot points minus the low. The first resistance is 2 multiplied by pivot points minus the low. Then as for our first support, we have 2 multiplied by pivot points minus the high. Then as for our second resistance, we have our pivot points plus the high minus the low. Okay, Then as for our second support, we have pivot points minus the high minus the low. Okay, so basically these are the formulas for calculating the pivot points. Okay, now the next thing for us to do is to identify these points on our chart after doing the calculations. Okay, so as for our first resistance, we're going to be multiplying 2 by, okay, first of all, we need to calculate our pivot points. Our pivot point is equal to the high being 2722.52 plus the low being 2638.05 plus the close being 2721.38. Okay, so our pivot point is 8081.95, 8081.95, 8081.95. So this is our pivot point. Now we're just going to calculate the first resistance. So we have a pivot point multiplied by 2 minus the low 2638.05. So we have 13525.85. 13. Oh, sorry, I made a mistake. We're supposed to divide this pivot point by this high plus low plus close. We're supposed to divide it by 3. I didn't do that. So we have 81.95 divided by 3. We have 2693.98. 2693.98. 2693.98. Okay. All right. Now let us calculate our first resistance. It's going to be 2 multiplied by 2693.98 minus the low, which is 2638.05. That gives us 2749.91. 2749.91. 2749.91. Okay, then let us calculate our first support. We're going to be having 2 multiplied by pivot point 2693.98 minus our high, which is 2722.52. That's going to give us 2665.44. 2665.44. 2665.44. Okay, now the next resistance we're going to be calculating it now. Our R2, we are going to calculate it, which is pivot point 2693.98 plus our high being 2722.52 minus our low being 2638.05. That gives us 2778.45. 2778.45. 2778.45. Okay, 2778.45. 0.45. So this gives us our second resistance. Now, as for our second support, we're also going to be calculating that. That is a pivot point 2693.98 minus our high being 2722.52 minus our low being 2638. Okay, let's just run through that again. The second support is the pivot point minus the high minus the low. It is 2693.98 minus the high being 2722.52 minus the low being 20 minus the low being 2638.05. Okay, I'm getting a negative value here. 2722.52 minus 2638.05. Okay, that's 84.47. Okay, 84.47. All right, I got it wrong somewhere. Okay, it's 4.47. So 26. All right. So our second support is 2609.51. 2609.51. 2609.51. Okay. So now, having identified these points, we can then plot our support and resistance levels. Now, the first resistance is around 2749. Around 2749 levels. 2749.91. That's for our first resistance. That's our R1. Then as for our second resistance, we have it at, as for our R2, we have it at 2778.45. Okay, then as for our first support, we have it at 2665.44. And as for our second support, we have it at 2609.51. Okay, so we have been able to identify our pivot point, our resistance and support levels that could result in possible rejections in the coming week. For the price of XAU USD, because this is XAU USD chart. Okay, so the PP, the pivot point, serves as the primary support or resistance level. Okay, let us identify the pivot point itself as well. That is 2693.98. That's the pivot point itself. So it is the primary support or resistance level. If the price is above the PP, the market is generally considered bullish. If below, the market is considered bearish. Then as for the resistance levels 1 and 2, they indicate potential price ceilings where selling pressure may increase. So you might want to watch for price action around these levels to identify reversal or breakout opportunities. Now, as for the support levels 1 and 2, they indicate potential price floors where buying interest may rise. Similar to resistance, observe price action here for potential buying opportunities or breakdowns. Now, when you have a breakout from any of these levels, if the price breaks above R1 or below S1, for example, it may indicate a strong trend in that direction. Then as for reversal, if the price approaches R1 or S1, for example, and shows signs of rejection, maybe like candlestick patterns, then you might consider this as a potential reversal signals. Now, some common pitfalls to avoid when trading with parallel points include: 1. Ignoring market context. Please always consider the overall market trend. Relying solely on parallel points without analyzing other factors like news or market sentiment can lead to poor decisions. Now, secondly, avoid entering too many trades, that is over trading. Avoid entering too many trades based on parallel points alone. Confirm your setups with additional technical indicators or price action analysis. Now, the third pitfall to avoid is not adjusting for volatility. Markets can be volatile and levels may not hold if there's a significant news event. So be prepared for price spikes and adjust your risk management accordingly. Very, very important. Now, the fourth point is focusing on one time frame. Pivot points can vary across different time frames. So you might want to always check multiple time frames to get a clearer picture of support and resistance levels. Okay, and then finally, a major pitfall to avoid is using outdated data. Ensure you are using the most recent high, low, and close data. We just use this particular candlestick to calculate our data. Okay, so when a new candle opens, depending on the time frame you are calculating your pivot points on, use the recent candlestick to calculate your pivot points. Okay, just the previous candlestick to calculate your pivot points and other levels. Okay, so by following these steps to calculate, plot, and interpret your weekly pivot points, you can enhance your trading strategy significantly. Remember to combine pivot points with other tools and analysis methods for the best results, and avoid the common pitfalls to improve your trading performance. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so you don't miss out on more trading insights. Cheers and happy trading.